I've watched money evolve from shells and coins to paper and banknotes. Each transformation reshaped commerce, trust, and power. Now I'm witnessing a new evolution: digital money. Digital currencies aren't just a technological innovation. I believe they're redefining how value is created, stored, and controlled. I see central banks, tech companies, and innovators racing to digitize money. They promise faster transactions, programmable payments, and greater financial inclusion. But beneath the surface, I worry about implications for sovereignty, privacy, and systemic control. To me, central bank digital currencies, or CBDCs, are the clearest sign of this shift. Issued by national authorities, CBDCs combine the legitimacy of fiat with the convenience of digital transactions. I can see how they could reduce our dependence on cash and improve monetary policy transmission. They could also enhance oversight of payments and enable governments to track money flows in real time. Officials argue this would help prevent illicit activity and give deeper insight into economic behavior. But I see a double edge. With digital money, I see unprecedented control. I know every transaction can be recorded, monitored, and even restricted. Programmable currency could automatically enforce tax compliance, limit spending on certain goods, or even impose expiration dates on balances. I recognize clear efficiency gains, but the power to control financial behavior is immense. I see private digital currencies adding another layer. I see stablecoins backed by fiat reserves offering rapid settlement and cross-border liquidity. I see cryptocurrencies offering decentralized alternatives beyond government oversight. I see them challenging traditional banking, opening new forms of financial freedom, and introducing risks from volatility, regulation, and systemic exposure. Digital money is altering the role of intermediaries. Commercial banks may become less central in payments as digital wallets, blockchain networks, and payment platforms gain influence. I watch the balance between public and private control shift. I see financial infrastructure becoming programmable, borderless, and instant. I believe global adoption patterns will shape power dynamics. I believe countries that embrace digital currency innovation can gain a competitive advantage in trade efficiency, financial surveillance, and capital flows. I worry that countries slower to adapt will face friction in cross-border transactions, reduced influence in global finance, and greater exposure to digital competitors. I see monetary policy itself transforming. With CBDCs, I understand central banks could implement negative interest rates directly, inject liquidity instantly, and tailor stimulus to specific demographics. I notice the transmission mechanism becomes direct rather than intermediated through banks. I also see that while this power is significant, it raises ethical and political questions about control, privacy, and consent. I think digital money challenges the idea of cash as a safe haven. I remember that historically individuals could store wealth outside the banking system, physically or in accounts beyond government reach. I see that digitization reduces anonymity and increases traceability. I ask, when all money is digital, what will protect individual autonomy? I see technology driving innovation rapidly, but adoption is uneven. I know infrastructure, regulatory alignment, and public trust determine the trajectory. I know cybersecurity is critical. I worry a single vulnerability in digital currency systems could trigger systemic shocks. I believe trust, always the foundation of money, remains the ultimate constraint. History reminds me that major shifts in money carry societal consequences. Just as paper notes disrupted commodity-backed systems and banks reshaped credit allocation, I believe digital currencies may redefine economic relationships. I think those who understand and anticipate these shifts will navigate risk and opportunity, while those who ignore them may face disruption. I see the rise of digital money as a structural evolution with global consequences. I see payment speed, financial inclusion, monetary policy, surveillance, and sovereignty converging in a new landscape where money is programmable, borders are transparent, and control is concentrated. I believe digital money, like all financial innovations, is neither inherently good nor bad. I see it as a tool. Its impact depends on design, governance, and intent. For individuals, corporations, and nations, I ask who controls it and how it will shape economic freedom. Digital money is here. I believe its rise will redefine trust, power, and the nature of money itself. Welcome to Cash and Chronicles, where money, power, and history collide.